Hi guys, it's Matt from Optimus Futures. I just want to be sure that everybody can hear me. One thing I want to do here, I don't see any of the comments. Maybe I need to open our own YouTube channel, Jake, so I can see the comments. Or maybe you want to do it on mine. Yeah, perfect. Perfect. Okay, so let me see here. Okay. Yeah, Jake, just open a new thing. Perfect. Okay, better. Okay. I just want to see that I'm live and see everyone. Okay. Oh, hello everyone. Okay, I see everybody's here, so everybody can hear you. Okay. Sorry, so everybody can hear me. Fantastic. Okay, so hi everyone. So thank you. Just had a little bit of I just wanted to let me remove this, and we're just going to talk about more day trading today. A few advanced topics. So first of all, thank you for your time, availability. Thank you for coming, and I look forward to having this with you. And again, thank you everyone. So I know everybody's saying hi. So hi everyone. Okay, so thank you for the first event. That was really good. I enjoyed it. I enjoyed communicating with you. I enjoyed answering all your questions and everything else. And so I thought I'll do it one more time, and I want to do it more, of course, in the future. But every time I want to just kind of tackle a little bit of a different angle and give you ideas and help you out, because I know a lot of you are overwhelmed. A lot of you have been to a lot of YouTube channels, books, forums, personal blogs. So I'm just going to try and, again, my favorite word in the world is being practical and pragmatical. So I'm going to try and give you a few ideas about some practical experience. So one of the first things that I want to talk about is the difference between being a trader and a market enthusiast. So there's a big difference between the two. Now, you can call it market enthusiast, you can call it fascinated with the markets, being one day discovering day trading, and then the month after absorbing as much material as you can and deciding, yes, this is what I want to do for a living, versus a more of a trader approach, where the trader approach is a different approach. It's not being enthusiastic about it, but you can be enthusiastic about discovering a new field always, but the approach is more, what does it take to be a trader, right? Not the idea of, hey, I want to be a trader, but what does it take to be a trader? What decisions do I want to take to be a trader? What are the risks that are involved, right? What are the challenges? Are most people successful doing it? Are most people not successful doing it? If people are not successful doing it, then why are they not successful doing it? If they are successful doing it, what are they doing right? And that's a totally different approach. It's more of a slow approach to business. It's more of a thought approach, which you kind of examine all the angles without having this, I don't know how to say it, but it's just this extreme fascination with trading, right? So I think the first approach, the trading approach, is a lot healthier, and you're not in a rush to get there. You kind of take steps back and you work more on habits. Now, I'm not going to talk about, the psychology of habits in this, in this live show, because it's totally falls outside of trading, although it has a lot of aspects in trading. But I want to just give you one thought. What you have to think of is the destination. You have to think of, where do you want to be as a trader? What kind of a lifestyle you want to have associated with your trading? What kind of results you want to see? You want to also see yourself at the end of the road with some sort of a plan, an organized plan, not being erratic, not one day trading one method, the second day trading another method, the third day jumping on stocks, and another day trying Forex, maybe that's better. All asset classes require the same type of habitual behavior and preparation, and especially for futures. So while we're on the subject of futures, I would tell you that there is substantial risk of loss in futures trading, and past performance is not indicative of future results. But I want to use an analogy of an airplane, okay, to kind of give you the difference between, how little changes can make very big difference in the long run. So when an airplane takes off from an airport, if the nose of the airplane just changes from 3.5 degrees, just 3.5 degrees, that's all it is. It's just like a movement like this. It will find itself in a totally different destination. So, for example, if you are flying, let's say, from San Francisco to Boston, right? You're trying to get from the East Coast, to the West Coast. If you change it by 3.5 degrees, you might find yourself in a place like Washington, right? Not Washington, D.C., not in Boston. And again, it's a small change. So what I'm trying to say is that on your way to become a trader, you're not going to wake up one day and be a trader. It's just very, very small changes along the way that will contribute to you becoming better and better at this. So it's everyday small changes, reviewing your trades, not being fascinated with the markets, not trying to read everything out there, not going to every forum and exchanging ideas. It's more of a lonely sport. It should be a lonely sport because it's you against yourself, right? So that's what you want to work on. Now, in the last webinar, one of the things that I mentioned, and some people actually, I don't know if they called me or emailed me, but they said that they have a great mentor and they have great indicators or anything like that. And what I said at the time in the first live show we had was that anyone that you come across will add at most 10% as value to your knowledge. And a lot of people maybe it didn't sit right with them, or maybe it did, or maybe they were curious about it. Now, this has nothing to do with the quality of the mentor, or the quality of the indicator, or the quality of the education that you're getting. It's because I truly believe that 90% of everything that you'll do will come from your own practical experience, not because somebody taught you that. It's very hard to explain to someone, it's like trying to teach your teenage kids to drive. There's a lot of stuff that's in your head that you take for granted, that sometimes it's very hard to pass that real experience to a driver in real time. So you kind of teach them the mechanics, right? So you teach them, what the wheel does, how to look at the mirror, how to accelerate, the brake. You teach them the components. It's very hard to convey real practical experience after you've been driving 5 years, 10 years, or 20 years, right? Or even longer. So that is what I meant by somebody could only add 10%. Not because they don't want to. It's just because the way we absorb things, because the way we learn things, and the way people teach us, right? So just keep that in mind. You have to kind of teach yourself along the way and not always look out for sources out there. You could look, but just don't sit there and expect those people to turn you into a magnificent trader, because they won't. Nobody will. Even if I came with a course tomorrow and I believe that I have a lot of knowledge, I believe that I would be able to just give foundation for people, right? Just to kind of set them in the right direction, and the rest is really up to them. I don't believe that I could teach somebody to be a great trader just because of what I have in my head. I have limitations of transferring my knowledge. You have your limitation of absorbing this knowledge. And what really happens in reality is that everything I really learned about the markets, despite everything, I had great mentors, by the way. I had real good mentors, honest people that I surrounded myself in the beginning of this career. I was very, very lucky that I was always kind of liked nice people and people who wanted to help. I was not attracted to people who hyped trading, right? Like I see before, you probably, when you surf YouTube, you probably see all those commercials before, right? That they're gonna teach you how to be a best trader, and those enormous percentages returns, I was never attracted to those people. It wasn't in my DNA or my nature. I was always more with the quiet people that didn't really flaunt their knowledge, but I knew that they're very knowledgeable. So I had very good mentors. And despite all the help that they gave me, the real stuff I really learned on my own. And so observing the markets, analyzing the markets, because it's a lonely sport. I have my own risk tolerance. I have my own risk capital, and you should definitely have risk capital when you trade futures. So all those things, I had to find a plan that matches me specifically. So again, don't be a market enthusiast, right? Don't just run there, try to read everything, absorb everything. Have a methodical direction of where you want to be. Choose the information carefully. And if there's one way to know if you're a market enthusiast or a trader, and don't be mad at me, is that if you have the word trader in your email, right? So, if you have one of those best trader 2020, forever at gmail.com, all I'm saying is, change your email maybe, and let's become a little bit more realistic when it comes to that. Okay, so somebody has here an issue with the sound. I'm really sorry. Does anybody have any sound issues? Okay. So I think everybody's okay with sound, right? I'm sorry. I think those of you who have sound issues, just shut everything down outside of YouTube so it streams better. If you have Skype open, if you have emails, if you have browser, so just try to... okay, so majority of you have it good. Okay, fantastic. It's okay now. All right, great. Okay, thank you for that. So, any questions about what I said right now? I see some questions here as far as okay. Okay. So somebody said they like the fact that I call day trading a sport. I would say that it requires a mental effort, just like sport. And if you saw recently the series about Michael Jordan in Netflix, I really suggest you watch it. I forget the name of the show, but it really shows you what work ethic is all about. And definitely, whether you're in day trading or anything else, in futures specifically, you definitely need that mentality, to always prepare and prepare. Okay, so the next thing that I'm going to talk about, and I promised, is how to stop fighting psychological barriers. Now, okay, let me just explain a little bit what I meant here, how to stop fighting psychological barriers. Just adjust the chair here a little bit. A lot of people, when they start trading, they start realizing that their own psychology stops them. And then one of the things that they do is that they start exploring the area of psychology, right? They start exploring of how do I overcome my fears? How do I overcome, the ability, I'm afraid to trade, or ability to place trades? Or they say things such as, if I'm placing a trade, then it's a loser. If I'm not placing a trade, I'm afraid it's a winner, and things of that nature. So I'm going to tell you this. What I realized along the way about psychology, that there is very deep psychology that's ingrained in us as people. And one of the challenges in trading, that it brings out the weakness in us, right? And it has the ability to also take our strengths that we have in other places, such as our jobs maybe, that require certain skill, and it would make it very difficult in trading. So that's one of the things that I've noticed that people kind of have an issue with, which is not understanding that, meaning that they think they could always understand what's going on in the back of their head, but psychology is something that evolved for humans over 1 billion years, and we can control everything. So we have to stop at some point trying to analyze every action that we do and really rather concentrate more on the numbers. Let me give you an example. So there are people who say, when I don't take trades, right, those trades turn out to be winners. And when I do take trades, they're always losers. They're always convinced that the trades they don't take are winners. And they start attributing it to bad luck or bad psychology or everything else. And I'll tell you, that's not the case at all. It's not psychology. It's your risk management and the way you evaluate trades while you're in a trade. Both your trades that you take, if your method, okay, is, let's call it method X, and you have 100 paper trades and you have 100 real trades, with the exception of commissions that is coming out, and with the exception of potential slippage that could occur, I would tell you, if let's say that those two could be adjusted even on a model trading, on a paper trading, you add the commissions, you add the slippage. I would tell you that it's on large trades, let's say on 1,000 trades, it's the exact same results. It's just the way you manage it. It's just the way you observe trades that are real versus live. Let me give you an example. Let's say you go long the mini S&P, let's say I'm just throwing a figure here. I know the market is way higher, but I'm just doing it for the sake of simplicity. Let's say that the market is at 3,000, right? And you go long. Let's say in a real trade, now the market starts going 2,999, 2,998, 2,997, you get out, right? And you're like, I couldn't take the loss, so I couldn't, so I got out. Versus a demo trade of the same thing, of being at 3,000, that's a demo now, right? 2,999, 2,998, 2,997, you didn't get out, the market rally turned around to 3,005. Now, it seems to you that your paper trade is good, but your real trade is not good. It's the exact same trade, exactly the same trade, but one, you manage differently. Maybe you put a stop loss lower. And again, when it comes to stop losses, just a legal disclaimer, you can get stopped out at prices not intended because market conditions might not allow you to get out of it at a time. But let's assume under normal market condition, just for the sake of illustration, you had a stop loss on your paper trading at 2,995. On paper trading, you obviously have more risk tolerance, right? You have a little bit more on this. It's not real money, it's not real market, so you allow yourself a little bit more flexibility. But so it seems to you that those trades are completely different. They're not different. It's exactly the same trade. But when you're trading live, you're just more nervous, right? And then you start asking yourself, well, maybe it's my psychology, right? Maybe it's something is wrong. Maybe I have fears. Maybe I have things of that nature. When really, in reality, it's risk management. So when I say you have to stop fighting psychological barriers, I truly believe you should work on your psychology, right? I really think that you should work on understanding the decision-making mechanism. You read books about decision-making, about habits, things of that nature. And it's important to understand it. But it's also important to understand that with time, you develop confidence, right? You develop confidence. Let me give you a hypothetical example. Let's say that every single trade, okay, let's say that every single trade that you did before, purely hypothetical example, had a 2-point risk management where stop loss, where you get out, and a 5-point exit. And every single time the market went just 1 point against you and then proceeded to take 5 points profit. 1 against you and to take 5 points profit. When you have those trades, right, 10 in a sequence in a row, right, then essentially you stop being afraid, right? you actually say to yourself, those trades are working and I'm going to keep on placing these trades. Essentially, this is where you have to get yourself to the same level of confidence with your trades, right? So at that point, you don't analyze your psychology anymore, right? At that point, you just focus on numbers and things of that nature, right? Okay, let me ask you if you have any questions. I'll just wait for a second to see if any questions are coming. I know there's a delay between my YouTube and the screen time, so I'm just going to give you an opportunity to ask questions. Okay, as I'll see the questions, I'll answer them, and I'll be more than happy to do that. Okay, so somebody says here, inevitably I'll lose when I talk to myself after the trade. It usually means I wasn't confident in the trade and I probably shouldn't have taken it. Okay, you know, this is exactly what I'm talking about when it comes to false psychology. You cannot be confident in the trade. There's no such thing as confident in a trade or not confident in a trade. It's not up to your confidence. It's up to your method. If your method says you should go long, you go long. If your method says you go short, you go short. Good traders can't always be, good traders can't always rely on trades that are, what's the word I'm looking for? That make them feel good, right? It's not about that. So I'm sorry if I disagree, but if you didn't feel good about a trade and you lost in the trade, it's not because you didn't feel good. It's because either you mismanaged the trade or you actually or something is faulty with the method. And again, I'm not saying that something is faulty with the method. I don't want you to go and rewrite the whole thing. But again, trading is not based on confidence, right? I think there are going to be many trades that your gut told you not to trade, but your system told you to go to do something, and you might not feel good with it, and you could potentially end up with a favorable result. So, for example, somebody mentioned here Atomic Habits, absolutely great book. So one of the things that, could happen, just going back to what I said, gut versus real. Let's say your system tells you to go short. After the NASDAQ fell 150 points, it just fell and fell and fell all day. And then all of a sudden you're getting a signal to go short. That doesn't feel comfortable, right? Because you're saying, well, maybe it fell already. Maybe, the market is going to bounce from here. But if you went short, maybe it is the right thing to do because that's what the system says. So you have to obey laws as opposed to feelings, right? Just my perspective. Okay. So let me see. Let's see if you have any more comments. Okay, somebody asked what's my favorite trading strategy. I don't have a favorite, to be honest with you. I think it's aligned with the same question as what is the best. My favorite should not be your favorite. I'm just going to be very honest. I mean, the way I look at things should not be the way you look at things. What I'm trying to do here is give all of you equally a good foundation to choose your own strategy, and yours is just as good as somebody else's. You can put two people side by side with each other, and you would see that they come from completely different schools of thought, and both of them succeed. Like, take, for example, Warren Buffett, that buys companies and invests long terms in infrastructures, right? He doesn't understand technology. He missed out, sadly, a lot of the technology sectors. And so, but he's good at what he does. And then you have somebody like, I think his name is John Simmons from the Renaissance Fund. And he's one of the best quant traders in the world, or I think he's outside of it, but he's got a team of people that is outside of it. But all they do is quantitative methods. That's all they do. And both of them have succeeded. And one, you cannot say that one is better than the other, right? all of them are basically, believe in their method and they stick to their method. They don't listen to anyone else. They revise their methods accordingly to what's right for them. But I just gave you two extreme examples so you understand that really you shouldn't be seeking a best strategy or ask what's my favorite strategy. Yours is just as good as anybody else's. Okay. Okay, I believe in my method, but I'm skeptical of systems. My sense that a truly good trader have multiple systems and can tell from the market condition which systems to use. That seem right to you? I would tell you. I apologize. I'm not sure. I apologize. I can't seem to. All right. Sorry about that. Okay, so somebody said here a method versus a system. I use the word interchangeably. I don't mean a system as in mechanical system. So you can have a mechanical system, or you can have which is a discretionary system, or you can have an automated system, or a breed of both. So I cannot tell you that I believe in one versus the other. I've seen both, and I've seen both cases succeed, and I've also seen both cases not succeed. So I don't know. But you said, that you have multiple systems, and you can tell from which system to use. Okay. So basically, if you have a number of methods, I don't believe that somebody could have, potentially you could have a number of methods, and when you have a number of methods, then and apply them differently to a market, it's difficult. It's not easy. It's not a question whether I believe in it or not. I do believe you could have, let's say, the same foundation for a method, but applied differently for different market conditions. So it would be the same method, but let's say one would use some sort of a range for a profit in a risk management, stop loss. And under more volatile conditions, you can use the same method, but with larger ranges for profit and larger risk management because of the volatility, and you just don't want to get knocked out each time. But if you have a method that you can detect every day by the day and apply it differently, no, I don't believe in that. I don't believe that you can wake up in the morning, have 4 different methods, and throw them in based on your gut. I just don't believe it. But I think you could potentially, again, have the same underlying fundamentals for a system, the same rules, but just the risk management applied to it differently under different market conditions. So and then again, you need something more objective to evaluate that. So for example, you could look at the VIX, right? If the VIX is under a certain number, you use one sort of profit target, and I'm assuming, like let's say for stock indices, right? So VIX doesn't affect other things, although it could. But for stock indices, for example, when you trade them, whether you trade the micro S&P or the micro NASDAQs, what you do is that you look at the VIX and you say, okay, today's volatility is such, I can use this type of risk management. If this type of volatility is today, I can use something else, right? So somebody says, starting out, it's hard to have multiple methods unless you can read the different market conditions. I agree. I would discourage somebody from just having a number of methods and applying each one of them differently. What happens over time is that, what I've seen happen is that people go into trading and they don't succeed on day one, and then they try another system, and then they try another system, and they just replace them, and they're thinking by replacing them they would get some consistency, when in fact you really have to check the method and backtest it to see what is done over a long period of time. So I agree that having multiple methods really beats simplicity, right? At least for beginners. So you're right. You're very welcome. Somebody just thanked me and said, thank you for your answer. You're very, very welcome. Okay. Let's talk about when should you go full-time trading. Okay. So you might be surprised for my answer, but I'm going to tell you this. I believe that 90% of the people should not trade full-time. And I'll tell you exactly why. I think that when you decide to trade full-time, the burden of making money is very difficult. First of all, day trading is really hard, or trading in general is hard. Yes, you can have periods that you're very, very successful, but it's a totally different psychology when you have to pay the bills. And nothing is guaranteed in the marketplace, right? But when you have money coming in and you have risk capital and you have a portfolio, I think psychologically you're a little bit more confident in terms of trading the markets. That's just my belief. I believe that you should have income. I believe that you should have a job. I believe that if you have all those things, then the psychological burden is not the same as sitting and trying to pay all your bills. Now, this is my belief, right? And I think if you were to go into full-time trading, I think you need at least, I would say 3 to 5 years, preferably 5 years of trading the markets before you go and attempt that. I had a customer, I still have that customer, I didn't have it, that came from, I can't reveal his name or I can't reveal what he trades or anything like that, but I just can tell you in general that we're very lucky to get that customer. That customer traded in an institution, right? And then he went and he says, now I want to trade on my own. And I told him that it's going to be, and he was a successful trader. So I'm not talking here to an amateur, right? I'm not talking to a guy who just learning the ropes. He sat in a team, in an institution, he had capital, he traded it, he was a successful trader. I told him it's going to be very difficult right now not being with the team. And what did I mean by that? First of all, you have nobody to bounce ideas from because you worked in a team. It's different because now you're sitting alone with the computer, right? And it's very different. Now, let me tell you this, okay? One of the difficulties besides finding a good method in being alone in front of the screen is the alone time. It's hard to be alone. It really is. And so it's just you in the market every day, and there's a fatigue that you experience. And I warned him about all that because, it's just my nature. As you see right now, I try to be as honest as I can about the business, about trading, about being a broker. It's all challenges. So I said, this is what you're up against. And after a while, 3 months later into that, I think when he first heard me, I don't think it was resistance, but at that point it was just theory. I'm just throwing theories in his ear, right? I'm just feeding him information. And everybody feeds us information, right? Everybody has an opinion. But after 3 to 4 months, is basically when he realized, that what's the challenge, right? When you're bored, you overtrade. When you're bored, it's not when you're bored, when you're alone and now you're not in a team, it's only you in the markets, so it's a different psychological burden that is there. And that's basically, so I told him, don't overtrade, try to stick to the same mentality you had before. It will take some time to adjust. I sure hope that that he would get to the same point that he was before, but obviously making him aware. Now I'm sharing this with you because this is coming from a person who actually had background in trading. So in the question of should you go full time, I think you should go through all the errors in the world, should have all the mistakes in the world. You should learn how the market moves. You can tweak your methodology, and then, basically, it will build something in you that you could potentially then evaluate whether you can go full time. Now, for the rest of us, I'll tell you this, okay? There is nothing wrong with being a part-time trader. There is nothing wrong. There's nothing wrong with having a job and getting steady income, and then at the same time having a trading account and allocating the hours that you can towards trading and treating it as a full-time job. Evaluating your trades before, preparing for the next day's moves, looking at the levels, realizing how you're going to react when the market gets there, not be surprised every day with a new scenario and kind of rely on your instincts. Basically, there's nothing wrong with it. And at the same time, you can enjoy it, not be under the psychological fear of not paying your bills. And especially now, that after COVID-19, some were able to transition to work from home, such as, Optimus Future is one of them. We all working remotely. And at the same time, there are people that actually were not able to, and maybe they don't, so they start thinking about trading as an income. But again, I think that it's not always a good idea because, again, it's a different psychology that's associated with it. So somebody says it's a lot of pressure to be a full-time trader without the proper financial backing. 100% right. If I didn't mention it, then I should. You definitely should have, the capital, at least for the first 6 months at minimum, to pay everything, to pay your mortgage, to pay your rent, to feed your children, to do everything, right? And kind of do that just in case you need that adjustment period for full time. So 100% right. And again, 6 months is my opinion only, right? You might need 2 years or a year or whatever period there is. So, that's one thing. Okay. Let me see what else. Okay. Let's go to the next thing. What is mental tolerance and how it affects your trading? Okay, so mental tolerance is basically where there's a number of things as far as mental tolerance. So when people approach trading, right, they think they could implement everything in a very short period of time, right? And when it comes to trading, you have to let yourself adjust slowly to things, very, very slowly. So let me talk for a minute about, the mental tolerance of size, for example, right? So a lot of people ask, well, they want to know how they can advance from one lot, to 10 lots, to 20 lots, to 30 lots, and hopefully trade bigger size, and hoping that their financial reward will come with that in advance. And what I discovered over time about myself and about others, that regardless of what I want, there is a certain comfort level where my mental tolerance allows me to trade. There's a certain size that you have to basically there's a certain size that you have to grow accordingly, and recognizing that at some point trading a certain size might have a negative impact on your way of thinking, make you nervous, and it will basically throw your entire method out the window. So let me give you an example. Let's say that you trade one contract, right? So you cannot go from 1 to 5 to 10 to 20. You can't have those leaps, because what you want to discover along the way is what is your mental tolerance, right? What potentially, there's out there, that what size that you're comfortable with, what markets are you comfortable with, So this is where it's really important. Now, I know a lot of guys could be probably disappointed at what I say, and maybe this is not what you guys want to hear in terms of size, but I think it's really important that you discover along the way where it makes you, where the method that you trade kind of throws it off for you mentally. So you trade one lot because you can't trade lower than one lot. I mean, you can trade, well, there's mini S&P and then there's the micro. Let's assume you're trading the lowest possible contract. Let's say you trade one micro. And then you advance to 2 micros, and then you advance to 3 micros. You don't go 1, 2, 4. You go 1, 2, 3, and then you 4, and then 5. And you slowly build it up. Give yourself time. Give your mind the ability to adjust really slowly, very slowly. Remember, habits are extremely important, and our brain works in such a way that if we take it to extremes, we always go back to our original level, because that's, fight or flight. So essentially advance your level, okay, according to your risk tolerance, and test it out. You don't know what it is yet. So go 1 and 2 and 3, and basically that will allow you to explore your mental tolerance, which is really, really important. It affects your trading. So somebody says that they will not scale faster than their win rate. Again, good comment, but it's subjective. This is your way of adding contracts. I think the question is not only winning. I think it's how much are you winning, and whether we're adding another contract or 2 contracts or 3 contracts is worth the risk reward in your mind. The market is liquid enough to absorb from 1 to 4, but again, it's all in the way you react to it. So allow yourself some time. So somebody asked, is anyone here a successful trader? I don't think it's a fair question. A lot of people, even if they're on this channel, they're probably trying to learn. I could tell you that I'm not going to mention names. I know some of my customers that are here or were here live, and I would tell you that some of them are. So again, I don't look at this channel as an opportunity to preach things. I really add knowledge. Somebody said here that these are not advanced techniques. These are general advice for beginners. I'm going to tell you this, okay? This is how I really strongly feel. I've been a broker for many, many years. And whether it's reading charts or whether it's risk management, sometimes there are periods that I just have to go to the basic, to the simple. When you look for something a little bit, I don't know what's your definition of advanced. When we write advanced, it's just not something that people talk day to day, but I find even most people can't even fathom the basics and implement the basics. Like, they hear it, but implementing them, it's a totally different story. So again, if it's not helping you, I'm sorry, don't mean to waste your time. Okay. Any questions so far, by the way? I see. Where do you go for fundamental analysis on the ES and NQ? I don't think it's a fundamental analysis of the market. I mean, they represent the market. So, pretty much everybody out there talks about it all day. So, not the best source for fundamentals. I read Bloomberg. I like the Bloomberg channel very much. I subscribe to it. I read it all the time. I find it gives me the information I need. Somebody says, from my experience in sport as well as trading, the more advanced one gets, the more focus on the basics and really comes to understanding what they are. Yes, I agree with you 100%. If you have the whole idea of trading, it's almost like taking a stone and removing parts out of it as humanly as possible to get some sort of a shape out of it. And that's what simplicity is. It's actually removing things and removing components and being basic and fundamental is extremely tough. When people, when they say, the concept of KISS, right? Keep it simple, stupid, right? It's very hard to implement in everything, right? It's just because our mind is racing, and our mind is also creative. It's trying to find creative solutions to problems, and it's hard for us not to go with our gut on that. And this is what it boils down to. It boils down to a concept and a method that works, even when training an athlete. So good comment, and I totally agree with you. Somebody asked if we are an FCM or an IB. We are an introducing broker. I find no reason to be an FCM. Being an IB gives me an opportunity to work with many FCMs and finding our customers the right home. Okay, so somebody has mentioned, the KISS, right? Thank you, Grateful 55. Okay, somebody asked, how do we reduce the psychological burden of trading alone? Should we join a chat room? That's difficult to answer, to each his own, but I never joined any rooms to do that. I mean, it's just a room that there's a moderator. Many times they just place hypothetical trades, and everybody in the room, 90% are paper traders, so I don't know. This is my experience. Could be better chat rooms. I didn't have good experience from customers telling me that they gained any value out of it. By the way, this is why I do this stuff for free, right? I want to invest in you guys. Hopefully you will come to Optimus. Hopefully you will be good traders, right? I don't think that this sort of thing, I need to have anybody in a room and just analyze lines all day. That is very hard to evaluate. Okay, so somebody says the more you practice your method, the more comfortable you become with your size, and easier it is to stick with the plan. Like I said, everything is basically, at the end of the day, everybody has their own method, their own progress level, and I hope, everybody progresses. I just want to make people feel comfortable with themselves, right? I don't want people to keep on questioning themselves all the time. Am I doing things right? Is my method better? Is his method better? Maybe he's doing something. Sometimes people scratch their head trying to find the logic in some mentor out there and the logic in what he does, and they start questioning themselves when they're right from maybe they could have more brains than their own mentor, right? They were just new to the business, they found somebody, or they found an indicator or a chat room, and then they just sit there and scratch their head. They're like, I don't get it. I would do this. Don't question yourself. Progress at your own level. Progress with the, with the level of analysis that you have. Look, like the example that I gave you with Warren Buffett and Jim Simmons. They're all coming from different schools, different thoughts. Some of you could be engineers. There's one way of thinking for engineers. Some of you could come from a practice where you use your hands more. You could have a totally different approach to this. You see things maybe in a pattern way. Maybe some of you recognize patterns. Each one of you basically has the right as a person to trade according to the risk tolerance, place as many trades as they want, when they want, and basically feel comfortable with themselves. So I'm here to give you that confidence to develop, your trading plan according to that. Okay. Let me go to the next topic. So somebody says here, thanks Matt for answering this. I retrace my previous comment about trading alone being the same as working from home in front of a computer all day. Okay, fine. That's okay. So we covered that. Okay. The next point that I promised to cover is how to avoid looking at 1,000 indicators for trade confirmation. Okay. Here's an experiment that I want you to do. Okay? Here's an experiment. On a paper trading account, just purely paper trading, take a cup and put inside two notes. One says long and one says short, right? And then just gonna mix it and just pull them out randomly. Go long, go short. Go long, go short, right? Just pull them out randomly. Your goal is, again, on a paper trading account, to actually do that random choice. And then just manage the trade. Don't look at any indicators after, don't do anything. Just manage the trade plain vanilla. Try to max out that paper trading for profit. Try to do that. You have the right to put a stop loss, of course. It's a hypothetical paper demo stop loss, and you have a demo profit target. What you will understand along the way after doing this 100 times and 200 times and 300 times, and by the way, this advice was given to me by a successful trader many years ago. And what you start to understand in all this, that the process is more important than anything. When you go long, somebody else goes short. When you go short, somebody else goes long. With the exception of commission and the spread, it's a zero-sum game. For the most part, it is a zero-sum game. So I don't believe in one's method is better than another. When you go long, they call it, what's interesting is that your trade goes through an exchange, right? But you can think of an exchange also metaphorically, right? You exchange an idea, right? You have somebody with an opposing idea. So you have, I'm sorry, I thought that I apologize. So where was I? Sorry. So after you randomly try to manage the trades, I know where I was, exchange. Okay, so you exchange an idea. So basically, what is the exchange of the idea? Somebody disagrees with your idea. You go long, he goes short, you go short, he goes long. Think of it this way, right? And either one of you could be right and about the trade. So what you actually end up doing is actually managing the trade, right? And you start to understand that actually the management of the trade is more important as to whether you're long or short, or whether what indicators you use or anything like that. Once you start just isolating that in itself, you will get a great insight into management of trades. And what you will also do, this is also prepares you to what we spoke about before. What we spoke about before is the idea. What did we speak about before? I'm getting older here. The idea of your gut, right? I mean, your feelings or your confidence level or anything like that. Then, because you randomly chose a long or a short, what you're starting to recognize is that it's not about your gut or your feeling or your confidence level. I mean, you have to be confident overall in trading and what you do. Clearly, your psychology has to be right for it. But it does not mean that you're confident for every single trade. I don't think good traders are the kind of people that every single trade that they had big winners on are ones that they were 100% confident. At least that's my opinion. And this is what I've read. This is what I talk to people. I don't never get the feeling that on their biggest winners, they had the most amount of confidence. So by managing the trades, randomly, whether they go long or go short, now you basically stick to a system. That cup, of course, I'm not recommending it with a real account, but it's an analogy that the whether you go long or short is actually inside the cup, right? Whenever you pull out of it, long or short. And your system in with real money could work the same. You all of a sudden have one feeling, but the system tells you to do something else. And then you end up managing that trade, right? So that exercise shows you that the process and management of trades is more important than your feeling whether the market should go up or down. Once you enter the trade, the management is up to you. Why you enter the trade is irrelevant. Somebody goes long because of Fibonacci. Somebody goes long because of a moving average. When you go long, somebody else went short because the order flow showed them that there's a drop in volume. Whatever the case is, whoever is more successful out of the trade is not the person with the more advanced method. It's the person who managed trades better. So on top of that model, then you can add other things. You can say, okay, on that model, I can use a moving average to exit, or a moving average, to manage the risk. And then you start learning slowly what every single technical analysis tool does. What moving averages, what kind of value they add, stochastics, what they add, RSIs, what they add. If you want more advanced topics like order flow, they're there, fine. You can learn all those things and just add them slowly as components, or decide if they help you in the management or not. But the key is really the management of the trade. That really is. Whether you go long or short, it's almost irrelevant. Of course, some people say, well, if I think the market is going up, I'm going to go long. Sure. I mean, if the indicators, if your method at the end of the day, which is not the cop and you want to do things randomly, but if it tells you to go long, sure, go long. But it's the management of the trades in the long run that will make you successful. So I hope this helps you, because, and again, the point was that I'm trying to say is how to avoid looking at 1,000 indicators for trade confirmations. What does that mean? It means that there's some people out there that think the more they look at things, the more screens they have open, more indicators, all those things would align to a super indicator in super confidence level that they would go long. In fact, it does exactly the opposite. Looking at too many things completely breaks your confidence. Completely does. And it wastes your time. It just wastes your time. You're sitting there and you're looking at the screen and you're looking at this indicator and this indicator and this indicator and 6 ones, and maybe they don't line up, maybe they do, but now you just got to the level of thinking that your entry is what's going to make you a winner. And it's not. The whole idea with mixing that cup and, randomly choosing long and short and managing it, that should give you the idea that it's really the process that's really more important here, right? And not the entry level, right? Not the entry point. Of course, it's important to enter at the right time. Timeliness, I'm not going to diminish it. But I think in the long run, what really is the process of managing the risk and the price, you can't control the price, but you can manage the process. And I believe that will take you to the next level of advanced trader and hopefully a profitable trader. Okay. Let me see if there are... Okay, so somebody here mentioned EAs. Those are the whole industry for expert advisors out there. I'm not buying into it. Okay, Gaming the Market is a good book regarding game theory and zero-sum game. Sure, Ben, thank you for... Ben, how you doing? Thanks for coming, buddy. Good to see you here. Ben writes... he has on the community.optimusfutures.com, he writes... a whole analysis of the S&P market. You should check it out. Go to commodity.optimusfutures.com and there's an S&P market that Ben writes, and I read it every day and it's great. Okay, next, some of the comments. You've done everything right, but the market has other ideas. What is your best mental breaks and how long do you give yourself to escape a bad streak? Don't know. Don't know how to answer that, I don't know. And I don't like to answer, I don't know. I wish I had the answer for everything, but at the same time, I just can't make up answers. You really have to kind of regroup and ask yourself what's the right thing to do here, and go over your trades, go over your good trades, go over your bad trades, and just decide, how to proceed from there. So Sophia said, thank you, Matt. Glad to help. Loss aversion is a bias, is a big issue for many. I agree with you. I agree with you. A lot of people are trying not to think about the losses, but about the wins, and not understanding that making money in the marketplace is a byproduct. making money is not the initial goal of a trader. The initial goal of a trader is to have a plan, a good risk management plan, trading the right size, meeting all the basic foundations out there, and the end result of that is potentially making money. And again, just like somebody mentioned the book here, Atomic Habits. One of the things, and as you see, I read a lot. So one of the things that he mentions there, that everything that you are is a result of your habits. Everything, your brain, your body, your mental growth, your knowledge, everything is what you have, the small things that you have done with it over time, right? So he talks about those leaps, that you can't have those leaps that everything changes all in one time frame. I mean, in a small time frame, but rather it's small changes that you do along the way that will get you there. Okay, so that's a good point. Okay, so you ask me here, software that you recommend for journaling, or do you use Excel? You can use Excel. There is a tool called also Edgewonk, edgewonk.com, that is really good, and to keep trades, to keep what's the word I'm looking for? To keep track of your trades, but you have to enter them manually. We are, to let you know, we are trying Excel and Google Sheets. Agree, Google Sheets are good. We are trying, probably, I don't promise, but by the end of the year, implement some sort of a journal trading system with our platform Optimus Flow. We're putting a lot of resources into Optimus Flow. I know this is not the opportunity for me. I don't want to take a small commercial break, but just to let you know, I'm doing everything I can on Optimus Flow to actually, it has the indicators, it has the order flow, it has technical analysis, charting, but what I'm trying to focus on is really order execution and risk management. So add more tools that would allow customers to execute better and have trailing orders, multiple bracket orders, things of that nature, and at the same time also, which we have, by the way, and also at the same time add risk management tools. Like one of the things that I've added was an alert to tell you if you're up or down on a certain asset that you trade, whether it's gold or a mini S&P. Also, we have time alerts to let you know if you're in the trade. If you don't want to be in the trade more than 30 seconds, you can do that. So I keep on adding additional tools, and I borrow my ideas, from practical people, things that come to my mind that, that sometimes over the years I start to think of what I think helps people to basically either help them in execution, but I also think about this, the psychological difficulty the traders had, right? So one of the and I try to overcome that with adding some sort of tools to help them manage it, and time is definitely one of them. Okay, so somebody says, I'm also interested in learning how to automate the trade. Well, the one thing I would tell you is that as far as automation, so I'm going to tell you this. I don't believe that somebody can take a discretionary method that he has troubles with, being a programmer or non-programmer, and turn into automation, and then all of a sudden life changes. I've actually seen people turn on and off automated systems just the same way they take trades and don't take trades in the discretionary system. So I used to be in love with automation, but today I would tell you that I think that people that actually maintain control over their accounts, for majority of people, they should use a discretionary system. Okay, so somebody says that they're running a demo of Optimus Flow. It's smooth, quick platform. Somebody says that Sierra Charts rocks. Whatever you guys trade, I'm here to support you. Again, I always respect personal preferences. So whatever system or platform we service you on, we do it with pleasure. Okay, we're past the hour, and the last question that I have here, that I said, what is the most important thing to keep in mind when you trade? So, as much as I don't like the question, what is the most important thing or the best or anything like that, I still think there's one thing that in my personal opinion, is most important when you trade an account, and that is size, right? So size is the most important thing when you trade, because you can be the most disciplined, you can have the best method in the world, you can have a super fast computer, you can execute, you can have an IQ of 700. If you don't trade the right size, you will fail. End the story, period. You over leverage, you will fail. Now, let me explain a little bit about the concept of day trading, right? So a lot of people are asking, what is your day trading margin? Just so you remember one thing, day trading margins are artificial. It was born out of competition between brokers, right? So the first competition was the commission competition, right? Which everybody was in a race to zero. And then the next thing was basically who gives you the lowest margins out there. Now, all those things are artificial. So for example, okay, let me give you an example. Some of our clearing firms allow as low as $40, in the micros, day trading margins, and they allow $400 on the E-mini S&P. Now, let's assume that you have a $2,000 account. Hypothetically, you can trade 5 E-mini S&Ps now, or you can have an initial position of 5. But should you? I don't think so. It's not a good idea. So margins have nothing to do with the size that you should trade for your account, right? So a lot of people say, oh, well, I can open, an account with Optimus with just 2,500 and I can trade, 5 lots of minis. And you shouldn't. I mean, because then every point that you trade is $250. And you have a small account. I mean, and one move, right, can wipe out your account. I wouldn't want that. You wouldn't want that. I want you to be successful. So, I'd rather have a consistent trader with me over time, or somebody who learns over time and hopefully becomes better with time, and trade the right size. So I'm going to tell you this. Consider the size that you trade. It, in my opinion, even if you have everything else perfect, or as perfect as you can get, again, I don't want to, it's all relative, right? So I appreciate whatever you built for yourself, and if it's working and it got to the point that it's working, then, I give you credit. So it's perfect for you, I should say. But, so I use the word, perfect is a little bit too loosely, but the point is that if you attach the wrong size at some point to that method, you're throwing it off completely. You're throwing your psychology off, you're throwing your risk management off, because then what really happens is that you could potentially keep on trading the same way and at some point make, let's say instead of trading one contract, you trade 5. For a very long time, you could potentially, make 5 times your profits. But when you start trading way bigger size outside of something that you shouldn't do for risk management, then one trade could wipe out your all the wins that you've ever done. And that's just not worth it, because it breaks you down psychologically. Now, periodically, yes, everybody should learn to take a big loss. It happens because of strategic mistakes, mental mistakes, or anything of that sort. And sometimes you do everything right, but the market didn't play along, right? Something happens, surprise announcement. So not everything that happens is because of you. But the key is that when it happens, the size that you have in the books, that will determine the impact that it has on your account. So again, trade accordingly. And believe in consistency. That's the most important thing. Believe in time and believe in consistency. Don't be in a rush. Those who are in a rush, they rarely implement things right. At least we at Optimus Futures are not chasing you. We respect your risk tolerance. We respect that you worked hard for your money. That's why we have the mentality that we have. Hey, you're welcome, Grateful 55. It's great. There is a recording of this available. Okay, I know it's a little bit past the hour. I'm just going to give you a chance to ask me one or two questions, and then I will basically end the stream. And just to remind everybody again that there's a substantial risk of loss in futures trading, and past performance is not indicative of future results. Okay, let me see if anything is coming. All right. Well, also, another thing that you should keep in mind is that you can always go to community.optimusfutures.com. Again, it's community.optimusfutures.com. And basically, we would be able to answer any questions over there. If you have trading questions or strategy questions or anything like that, and of course you can also communicate between all of you to give each other, support, and at the same time, give each other practical advice. Again, everybody's advice is good as long as it's coming from a place of experience. Okay, so somebody says, when is your next stream? We will try to do that basically next week. Yeah, I'll try to be here on Thursday next week as well. If I have the time, I enjoy doing this. I enjoy interacting with people. I enjoy, inspiring people, and, hopefully you guys are enjoying it too. Somebody asked me, what was your best trade? I really prefer not to say, but I want to tell you that I was very happy that day. That's all I could tell you. It was a really happy day, but I don't think that anybody's approach to trading, should be for that one best trade, really. Because, you could make a lot of money one day, and then, you can give it back in other ways. Winning is an overwhelming, challenge. It's overwhelming when you have this. And after that, if you don't have the consistency, you can give everything back. As much as everybody wants to recognize that one good trade, every trader had it at some point. But I'm going to tell you, you might have it or you might not. It is way better to be consistent. It is way better to be consistent than to be little, win a chunk, of money, and then potentially give it back, or basically get into a period that you can trade after, that it averages out to be very small over time. So just, as much as I want to sit here and brag, I just can't, because, a lot of those trades, honestly, it's also luck. That's the truth. If you got into a trade and it just all of a sudden had this huge runner, and, it just went beyond what you possibly anticipated, some of it is luck. I mean, take an example of the day the oil was short, right? If you were short oil for a few days and you ended up being short and then it went negative, you never anticipated in a million years that the oil would go negative. And I think it went as negative. I think it settled down 38. So in every single contract, you had $38,000. That was luck. That would have been luck. It wouldn't have been, because nobody anticipated it. In the news, there are investigations right now, by the way, into some company, I think they're out of London, that made $500 million short the oil. Clearly, they never thought in a million years that the exchange would go into negative. They're being investigated right now, by the way. So, I don't know if what they did is legitimate or not, but the point is they made money, and this is luck. So what I wanted to tell you is that, none of you should think about big wins. I think with experience and time and numbers, it could happen. But I think it's more important to focus on consistency. That's really what's important. So, again, don't want to give the big wins. I don't want to, some sort of a name out there. Well, it's not a name. What's the word I'm looking for? Give you the impression that this is what you're actually looking for. That's basically it. So thank you. Somebody mentioned long codec. No, that's not what you want to do. Somebody says process over profit. I agree with you. So basically, that's it. So somebody mentioned here again. If George Soros, I think he made like $2 billion on the pound. He's a fundamental trader. He had the money. I don't think when you get into those trades, how much you're going to make. And when you trade, when a magnitude like that happens, it's also, again, a question of luck. Thank you for everyone for being here. I'm going to stop answering the questions right now. But again, you can go to community.optimusfutures.com. And again, I wish you the best of luck in your trades. I'm here to help you out. My team is here to help you out. And that's basically it. So all the best. And I'm looking forward, to our next session. Thank you. Stay safe, stay healthy, and put your masks on. Okay? Thank you. Bye.